Set a little bit the scene of the work that you're doing at the moment. I know you're working on a revision to the Non-Financial Reporting Directive, but of course the debate is much broader than just this piece of legislation.
So what are the problems? I'll now turn to the problems that we've identified in the information that is currently being published by companies. And I think there's a broad consensus around this. First of all, there's a lack of comparability in information published by different companies. And this seems to stem largely from the fact that the Non-Financial Reporting Directive does not prescribe any particular or comprehensive or detailed reporting framework. Secondly, there's a problem with the relevance of information. So some material information is not disclosed. Some information that is disclosed is not material and therefore obscures what material information is disclosed. Is linked to also to one of the topics that Nick highlighted, which is digitalisation. Many of you will have seen that in the CMU action plan, the Commission has announced that we will propose the creation of what is called the European Single Access Point. There's been a very strong call from some investor groups to create a specific platform for ESG information. I personally do not think we should segregate ESG information from other types of information disclosed by companies. I would much rather go for one platform through which all regulated information that is disclosed by companies can be accessed.
It's a question around comparability and standards, the multitude of standards, but also European specificity when it comes to standards.
In spite of the very short time frame, we have divided our project in 3 phases. Phase 1 until the end of October is the assessment phase, state of play. Then starting November 1st, and with probably a little overlap, we are going to analyze the proposals and the scenarios we can offer to the Commission until Christmas, roughly, and we will dedicate January to the finalization of our recommendations and to outreaches.
There's been a lot of talk about whether we should go for international standards or European standards. I don't think it is a choice of either or. We have made clear since the very beginning, and Executive Vice President Dombrovskis made clear in a couple of speeches earlier this year, that what we would like to do is to build on existing standards that may be available already. And the question will be, where do we strike the balance between building as much as possible on international standards so that we do not unnecessarily fragment capital markets on a jurisdictional basis, but at the same time ensure that we reflect the needs of the broader European policy and legal framework.
This mandatory element has to be aligned with the policy objectives of any jurisdiction. So this is, for me, there is no controversy, there is no confrontation. It's just a combination of, a global dimension and also the most advanced or the policy objectives, which are dear to a jurisdiction and which have been decided by EU institutions in this case or any other.
What do we actually need to make non-financial reporting work? And we see here certain prerequisites. So first of all, we see the need for alignment of the NFRD with the EU taxonomy regulation and existing disclosures regulations. We touched on this, from the issuers and the investors' perspectives, as well as the normative frameworks, which actually provide some relevant insights and some alignment where and how also sustainability accounting standards, for instance, could be concerned. And hence, we highlighted in our consultation the importance of looking at standards such as SASB TCFD, but also GRI, because that again gives us a broader remit from financial to dual materiality in the context of these normative frameworks that are already out there.
What opportunities do you see for technology, machine learning, AI in this whole area? And where do you see its limitations?
To use the language of the UN Sustainable Development Goals, ESG data should be focused on the future that we want. And where we think technology can help is with cloud computing, artificial intelligence and machine learning, as you've highlighted, NLP, which is natural linguistic processing. Now, it's possible with AI ML, it is actually possible to put a large number of signals to work on structured and unstructured data, and that can help analyze a company and its supply chain under various climate change scenarios.
We see definitely enormous potential for artificial intelligence and blockchain and other fintech applications to identify, measure, and standardize data and information linked to ESG.
The concept of materiality, which I know I'm probably going to get some grumpy emails if I say this, but we tend to look at materiality based on the industrial footprint of the company, and we use an industrial classification framework, a vertical one, from several providers to determine whether the questions are material for that company. And so the concept of us as market participants saying this is material to you or not as a company, I think introduces bias again to the data challenge, because we are saying to the companies, we think this is what you're doing and therefore please answer our questions. So I think materiality needs to be handled carefully with how we deploy it in regulation and in data collection structures.
Around this issue of tagging and contact points, maybe you can say a bit more about European contact points when you said it's not one big ESMA-led supercomputer similar to the SEC. Maybe you can explore a little bit more.
The tagging for me is key. Please tag from day one. In other words, give an address to any data point that you want, and therefore any machine will be able to find it.
That clearly seems to exist is a lack of reliability of information. It's notable that the Non-Financial Reporting Directive does not prescribe any assurance requirements really for the non-financial statement. It's purely an existence check by the auditor. If we look at the possibility of imposing stronger assurance requirements, you really need a standard to do that, because you can only provide assurance really if there's a standard against which, a common standard against which one can provide assurance.
For information to be trusted, there is most frequently the call for audit or assurance on this information. This needs to be added on top for this information to be really trustworthy and accepted by the market. There need to be proper standards in terms of how the information is prepared, how the information is defined, what the parameter is, and how the measurement actually works. Yeah, so that there is something that any trust provider can attest against. And then there needs also to be proper attestation standards on what the procedures are and what the expectations are for the auditor to, in the end, give a positive assurance statement